Good afternoon. This is Ken Long from Tortoise Capital with a sample chat room daily debriefing. We're going to take a look at a swing trade update in Anadarko. 5 sample trades from fellow traders from the chat room live today. I'm going to illustrate some RLCO and SQC and frog example trades, and then we will do a sample trade frame on a max pain range compression trade for CLF, which is Cliffs Natural Resources, that we're setting up for tomorrow. In Anadarko, price has moved. This is on a daily chart. Price has moved to close the gap, which we've been stalking. First alerted to this trade on the bottoming tail in this big elephant bar, which then consolidated into a sideways quiet channel when price crossed its own 20 moving period average. Played the breakout here and had a nice pullback and then a continuation pattern and moved up to close the gap. So this fires as a bottoming tail, as a max pain range compression, and then managed in the usual way. So continuing to march on that one, looking good. This is a regression line crossover trade from a trader in the chat room today. He saw price consolidating here at the bottom of the river. Ended up playing a breakout here. Crossed the Bollinger Band mean, left the river, got to the far side of the river, and this is the important part here. He saw the spike leaving the floodplain and pulling back into the floodplain, and that was good enough for him to manage his 1R exit. So the important learning part on this one was they had a measured risk, but also used the RLCO framework to help him make sense out of this trade and decide when enough was enough. Good trade. Here's one that is a sideways quiet channel. Now he decided to play the breakout here inside the channel. It reached the far side of the floodplain, and upon its re-entry back into the river, he decided to execute for 0.55 R. So this is just a case of a inside the channel trade. This is one from Heather. We have a breakout from sideways quiet channel. She's getting an entry here around 66.10 with about a 40-cent stop here, just at the below the Bollinger Band mean or at the edge of the river. Take your pick. And she gets a nice move that leaves the river and the floodplain, rides the edge all the way up, pulled back as the regression line crossover is occurring. She goes ahead and takes her exit at 67.07 for a couple R. This is on symbol NUS, again a sideways quiet channel with an entry right around 79.50 with a dollar initial stop below the Bollinger Band mean, and I was able to exit later in the day at 83 for a 4-hour trade, and again leaves the river, is riding the edge of the floodplain, consolidates, takes half a position here, half a position here, and locks in a nice 4-hour trade. And here's one in Tesla. She gets a regression line crossover, plays the breakout and reversion to the mean here, gets a nice move through the river into the floodplain, to the edge of the floodplain, takes half a position, gives it some time to work, not showing any willingness to continue. Exits over here on their second half at 179. So a $3 move on a $1 stop, 3-hour trade. That's her trade on 10 minutes, and then this was fine-tuning that trade on the 3-minute chart. Same trade, but you can see the management principle here of exiting as the regression line crossover is starting to occur and protects against the move back towards the Bollinger Band mean. Great management. Here's one I did today at the end of the day. in XIV. That's the inverse volatility ETF. What we had was a sideways quiet channel developing here with a swing low. I had a short breakout, another sideways quiet channel here, and so I start stalking the trade here as it seems to be holding at a higher support level than the previous one. I take the breakout at 36.40 with a 20-cent stop. Now the 20-cent stop would actually be down around here, but I would not have allowed it to go outside the floodplain. What makes this a particularly nice SQC is that you've got the Bollinger Band pinch here. So sideways because the mean is sideways, quiet because the Bollinger Band pinch, and channel because you have price in both regression lines inside the river. This is getting towards near the end of the day. So the entry's at 36.40 using a 20-cent stop, moves up outside the floodplain, pulls back towards the regression line, crossover here, and that's my signal to exit as we're getting near the end of the day. Exit 36.58 for 0.9R. If you use the red line as the initial stop, then that'd be almost 2R, but I was using the wider 20-cent stop because I'm comfortable with that with XIV. This is a frog trade in IWM, the Russell Small Cap today. This is the open. This is 30 minutes. That's 60 minutes. This is the frog standard deviation for IWM, or 50 cents in this yellow stack. The accelerated frog, if you were the half a frog standard deviation, is 25 cents. So it's 60 minutes in. We still haven't had a frog standard deviation move yet. Later, right after 12 noon, we now get a frog move away from the low of the day. So this is the low of the day. Price is moving up at this price level at 117.05. You get the full SD move. Mechanical entry here with a trailing stop of 1 SD. That's the yellow bar. Would have cranked out 0.4R to exit when you exit 30 minutes before the close. Get the automatic exit here at 117.26, so 0.4R, you make this green bar. If you're using the accelerated frog, or the aggressive frog, where you only are waiting for half an SD move, but using a full SD stop, right around the 60-minute mark, you might have entered here or shortly after here on this move up. Again, both of those are a half SD off the low of the day, and price is moving up. Or if you don't get one of those two entries, you should get this third entry. This third entry is especially a nice one for a discretionary trader because you have a low, a higher low. You're well into the move of the day. The rest of the market is moving up, and now you've moved a half SD off the low. You can take this entry. You can either use a full SD or a half SD stop. If you use a half SD stop, this is almost a 2R exit. If you use a full SD stop, this is a full R exit. And so this are just a couple different ways you can use the frog, either mechanically or with a little bit of discretion. Finally, we're just going to take a look at the auto framer. That's a practice that allows us to frame trades based on a pure reward to risk ratio. The top of the stack with a reward to risk ratio of 6-to-1 is Cliffs Natural Resources, one of our favorite trading targets. And so the suggested swing trade initial risk on this is 60 cents for my risk, which is the middle value of a quarter of an ATR risk, a full ATR risk, or the full range risk, which was if we were to enter a nickel above yesterday's high with a stop a nickel below yesterday's low, that would give us a risk of 60 cents. And because that's in the middle between the minimum and the maximum ATR risk, that's the risk that we selected. And based on that 60 cents, a retest of the 10-day high would give us a potential reward of $3.62, and so that computes to 6-to-1 reward to risk ratio. This is what that look. Now, by the way, these are all the others on our standard trading list that meet the minimum criteria of 2-to-1. So we have quite a few potential candidates for tomorrow. So we'll just take a look at one of them, Cliffs Natural Resources. This is now on a daily chart using the RLCO framework marked up in the usual way. So this is the day that I'm framing, this vertical blue line. Mechanical entry would be 5 cents above yesterday's close, so we would like to see an open inside yesterday's range, and then an entry at 2150 would be an entry really still in the floodplain with a risk 5 cents below yesterday's low at about 21 or 20.95. Because this has been such a max pain and sell-off, any violation below the red line would be an automatic stop and reverse for us. So we're willing to risk 60 cents in here with the idea of looking at profit targets potentially at the edge of the river, the Bollinger Band mean, far side of the river, far side of the floodplain. In this particular case, if we got the entry at 2150, and if we saw it pass through 2275, not only would we be at about a little over 2R, I would take that as signs of being willing to add a position at that point, because we're 2R in hand plus momentum working its way through the dragon. And then with a target at least to the Bollinger Band mean or the far side of the river. And Cliff's intraday range stat is such that it can make that move from 2150 to 2275, which would not be surprising. So that's the max pain range compression. You can see the sell-off from the 10-day high was extreme, and then compressed into a tight range bar today with a higher low than the previous day. So that's the beginning of an indication of a reversion to the mean, which would get us back up to 24. So we use a combination of this max pain range compression and then the RLCO framework to help us frame trades. Now it turns out if we get some movement inside CLF, this would also be a fantastic candidate for frog trading or intraday RLCO framework trading on 3 minutes in the form of core and turbo. But no matter what, if we got price moving through 2150 tomorrow, I would be automatically wanting to buy that one on a swing trade basis, and so that's why I'm also interested in it on a intraday basis. So that's a quick look at some trading activity from the chat room today. Thanks to the traders for sharing their insights and for working hard on their daily practice. It's Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.